Hey, this is Mike Swanson of Wall Street Window. If we can take anything away from what's happened the past couple of weeks and today in the stock market, look, the S&P 500 is about to close above the blue trend line. We're having a big day in the NASDAQ. And in the past couple of videos or past couple of weeks, I've been talking about why I believe this trend line would be broken and we would launch into a cyclical bull market for the US stock market in 2023, despite the vicious bear market of last year, despite all the uncertainty in the economic outlook, which is undeniable. Anyone who tells you that they know for sure what's going to happen with the economy and inflation, they're selling you something that they don't got, because no one knows exactly what's going to happen. And that's why, not just for day traders, but for investors, price action strategies and analysis are the key to navigating the markets this year. Today's imminent breakout is making that more evident than ever. And I was someone that in 2021, because of what was happening with the internals of the stock market, the way the price action was playing out with most stocks relative to the averages, I warned of a coming correction or a bear market. It was the most powerful signal consistent that there is. And then the bear market came. But those same warning indicators gave us a green light. They told us that this rally was going to be different than the rallies of August, the rallies of March, all the rallies of last year, and turn into, a real one. The momentum is only building, and it's happening because of the price action of the stocks inside the stock market. Internals turned up. There was a breath thrust to accelerate the internal action that already had begun. That breath thrust happened 2 weeks ago, and now buying is flowing into the NASDAQ. But if you want to beat the market, which is my goal, I'm someone that likes to hold positions for 12 months out and hold stocks, sectors, ETFs that are going to outperform the S&P 500. That's the key to beating the market. And price analysis of what these things are doing relative to the stock market is how to accomplish that. So if we look at, what most people frankly do when they think of price action strategies, they tend to think of, oh, what's up the most? I'm buying that. And that's how I'm going to make money. And what you're seeing right here is the Fidelity website, and they've got this list of order flows by customers. These are the top traded stocks, ETFs today as of 1 o'clock. Tesla is the number one most traded stock. Tesla is up 7.28%. Now, when it comes to Tesla, you may think, well, okay, price action strategies. I'm going to buy Tesla because it's up 7%, and that's a big gain. And I'm going to buy that because that's big price action. Well, today it is, but you've got to go deeper than what is simply happening today if you want to decide whether you want to buy something that you can hold for a couple of weeks or 12 months. What it might do in the next 5 minutes, I don't know. And what I'm going to show you doesn't apply to that. So let's take a look at Tesla. And when we do that, we can see that, now it's up 8%. So it's even up even more than it was at 1 o'clock in 40 minutes. Now, the indicator, and I'm using stock charts to show you this, on the bottom of this chart is a ratio. It's taking the price of Tesla, dividing it by the S&P 500. And you can see that this indicator, it's on the bottom of the chart, has been in decline since November of 2021, and it's barely gone up this year, even though Tesla, when you just look at the percentage today, and it's a lot. Well, Tesla is an extremely volatile stock. That stock can go down or up 5% every day. It does it all the time. Today it's up a little more, but the stock market's up quite a bit today. So Tesla's having a good day. But what this indicator shows is that Tesla is actually underperforming the S&P 500 and still is, even though it's up a lot today. When you look at that action in context with what Tesla's been doing, for over 12 months, and even with the rally, it's lagging the S&P 500. Stocks that lag the S&P 500 tend to collapse or fall more than the S&P 500 does when the S&P 500 pulls back. And then they don't make up for their losses when the market rallies. That's exactly what Tesla's doing. Tesla isn't even above the blue line on this chart, the 50-day moving average. It's not even above the December high. So here's what you should do and think about, and I'm going to show you some examples. If you want to buy something that's going to beat the market, not just have a good day today, but has a chance to do very well and beat the performance S&P 500, look for the things fueling the rally, not just today, but over the past couple months. Look for the stocks inside the stock market outperforming the market. Now, and I've been doing videos about all sorts of sectors doing this, but today I'm going to focus on what is breaking, what's going to make the S&P 500 go up, or the NASDAQ this year. So Tesla, Meta, Google, Amazon, you heard about FANG. Those FANG stocks plus Tesla helped drive the NASDAQ and frankly the S&P 500 up because they're doing so well from like 2017 to end of 2021. Then last year, those stocks just crumbled, and they helped make the NASDAQ go down even more than the S&P 500 did. They were disaster stocks, and most of those stocks are still lagging. Microsoft is one of these stocks. If we look at Microsoft, we see a stock that, yes, it's up 1.67% today, but this relative strength ratio on the bottom of the chart is awful. And compare this 1.67% gain to the triple Qs up 2.59%. What would you rather own, Microsoft or the QQQs? Well, if those were the choices, I would rather own the QQQs because Microsoft is lagging that. Microsoft is lagging the S&P 500. If I want to buy tech stocks, I'm going to look at the price action of those tech stocks relative to the index that they're in. And when I do that, what I find is that when it comes to the NASDAQ, leadership has shifted. Microsoft, Tesla, Google, their leadership is not going back. And Meta, look at Meta. Meta is an example of what I'm talking about. Yes, Meta has had a 40% bounce since November, but it's still lagging the NASDAQ. It's not, if we drew a trend line on it, it's not breaking out. It's still, look, most stocks are doing better. This is the New York Stock Exchange Composite, and it's outperforming the S&P 500, made up of thousands of stocks. The Russell 2000 is about doing the same as the S&P 500, but it's doing better than Tesla on a relative strength basis. The ARK ETF is a disaster. Yes, it's up from bouncing, but the relative strength is dead. That trend line at the bottom is dead. So we want things that line is going up, not down, and that's how we incorporate the price action analysis into investment decisions. So there is a sector that's very important to the technology space that is outperforming, that is breaking out, and that is the semiconductor sector. So when we look at that sector, we can see SMH is an ETF that tracks it, breaking out above the December highs. It broke the trend line the other week already. if we drew a trend line connecting the lows, it already broke out, and it's above December highs. It's testing the August highs. It's up 5% today, up double the return of the QQQs today. But more importantly, the relative strength ratio is turning up. It bottomed in October and made a higher low in December, and now it's clearing the December highs, testing the August highs. So the ratio has, shifted into an uptrend, and the top stocks in that sector are now taking control of the NASDAQ for the bulls. And an example is NVIDIA. NVIDIA is up like Tesla is up today, but NVIDIA is a better buy than Tesla is, because NVIDIA has cleared the 200-day moving average, it's cleared the 50-day moving average, it's cleared the 150, and today it's clearing the December highs. Relative strength ratio on the bottom is in an uptrend since October. I would rather own NVIDIA than Tesla, and I actually took a small position in it this morning. Apply this sort of analysis to other sectors and you find big winners. But if you want to focus on the tech space, semiconductors, you narrow your focus on them. Now, let's talk about outside the tech space. I've talked a lot about mining stocks. I've talked a lot about emerging markets, but I want to show you a sector now coming alive that's been outperforming the market since Labor Day, and that is the casino sector. You can see the relative strength ratio made a bottom in October. Caesars has news today. I might write about that in a blog post, but many of the casino stocks are soaring. Here's Las Vegas Sands. Wynn, I believe, is another one that's soaring. By the way, I do have a position in Caesars. Wynn is soaring. MGM is also doing well. So this is a sector as a whole outperforming the S&P 500. There's more to the world than tech stocks, but if you want to focus only on tech stocks, think semiconductors. So look, this is a big day, in the markets. Still a lot of people are skittish because they hear about all the uncertainty in the economy and things are uncertain, but the stock market, is something that tends to bottom out before a recession actually hits the headlines. You typically get a bear market into a recession and a bottom right before it's official. The market's forward looking, and we're reaching the end of the interest rate hiking cycle. The size of the hikes has already been reduced. That's already helped fuel a mining stock rally that began several months ago. Gold, silver broke away from the U.S. stock market. Emerging markets broke away because the dollar started to roll over. The dollar already peaked. There is a global new bull market that's already begun. I showed that in the last video. But now the buying is spreading to the S&P 500 and the NASDAQ, and that semiconductor space is the key for the bulls. Not Tesla, not Meta, semiconductors. And there's all kinds of opportunities now in this market with the New York Stock Exchange doing as index composite, doing as well as it is. But remember, the news is going to be uncertain. It's not going to get better. Frankly, it's going to get worse, most likely. Inflation news might get better. That might likely will continue to get better in the coming months. But we could see the economic news get worse. But the stock market doesn't trade on today's headlines. It trades on, it's already prices things in. And that's why the bear market happened last year. And here we are. So interesting times. If you like this video, hit the like button. I know to do another one. If you want to get my stock trading updates via email, scroll below, join the email list. If you want the next video update from YouTube, hit the subscribe button, hit the bell, and YouTube will send that to you as soon as it's up. And I'll be talking with you later.